I do want to, however, get to our top story today, and that is the new letter from Carl Icahn to Apple CEO Tim Cook, urging that company to buy back a lot more stock while making the case that shares should be trading at more than $200, saying the market's simply getting it wrong. I have Joe Terranova of Virtus today with me. John Najarian is the co-founder of Option Monster. He's here as well, as is Josh Brown of Ridholtz Wealth Management. All three on set with me. I also want to welcome in Carl Icahn, his son Brett, and David Schechter, who collectively sent that letter to Tim Cook and who are making their first ever appearance as a trio on this network. Gentlemen, it's great to have you.
Yeah, good to be here, Scott.
I'm going to be, I guess I'm going to be taking the title of traffic cop to a whole new level today with three folks on the phone. That's a record for us. So thank you for being here. It's good to have you. I do want to begin, Carl, with you first. To quote the great Yogi Berra, this is deja vu all over again. Why another letter almost to a month, a year ago, that you sent the first letter to Apple asking for a massive buyback? Why another one?
Well, you know, we're certainly proud of the investment in Apple. When we tweeted it, it's up over 55% since we tweeted it to our followers about a year ago. We believe it's one of the great companies, literally, of the last few decades. If you read the letter, I think you'll get the gist of it, so we don't have to really go into point by point. But just, I look at things very simply, and just simply, in the greatest industry right now in the world, which is really the mobile phone and the iPad, you really can't compete with Apple. So it's not a question of taking market share. It's just a question of how far Apple can go with this, because they've built this great ecosystem. And I think, as I say, Tim Cook has done a great job doing that. And so basically, you can't compete. Therefore, we think it should have a much bigger multiple than it does, because it really is a software company, not a hardware company. And every time they sell a phone, Scott, they have another annuity. They have another flow that they're guaranteed, because people don't get rid of these phones. And I think this is not realized, and as a result, we're writing this letter because we're saying very respectfully, because we really do believe Tim's done a great job, and we actually congratulate the board for keeping Tim and being involved and being responsible.
Right.
But that's not the point. This is not my usual corporate governance dysfunction, talking about the dysfunctional corporate governance. And therefore, we're saying, though, that this is sort of our expertise as far as the finance goes. And we're not presuming to tell them at all what to do about Apple, but we say they have $135 billion, and why not take advantage of what we consider to be a very low price?
Right, Carl. Why don't you grab a little drop of water there? I'll ask Brett. So if this is the case, Brett, as you guys lay out so thoroughly in this letter, why is the market getting it so wrong? If shares should be trading at $203 today, why are they not?
That's a good question, Scott. I mean, given that it's a growth, like we obviously believe that it's a high growth company with very robust earnings over the next 3 years. And it's trading currently at a PE of only 8 times. It really just doesn't make sense to us. I mean, we've heard obviously different ideas that suggest maybe why it's trading at such a low multiple, but no ideas that I think any of us think are any good, which is why we're so adamant about the opportunity for the company to be able to take advantage of that and buy back more stock now.
Yeah, Dave, you make the case, clearly that you think one of the reasons Apple's trading where it is because it's under-owned by mutual funds and otherwise, correct?
That is true. Mutual funds in general, the managers of the mutual funds are paid based on assets under management. And right now, a couple of different outfits have published research about how underweight the large actively managed mutual funds are in Apple. And to the extent Apple outperforms the S&P 500, those managers will underperform the S&P 500 index, which they're compared to. So we think that that will be potentially a major catalyst as Apple proves the myth regarding commoditization with regards to its products is false over time, as they have over the last couple of years. The premise as to why those funds do not own Apple at an equal weight or overweight position should be a trigger for them to buy more shares.
Carl, what's interesting, as I said, the letter is so specific, except it doesn't say what size of a buyback you guys would like to see. A year ago, you were very specific. You wanted a $150 billion buyback. What about this time? What's the number?
You're asking me. You know, I'd love them to go all in, but obviously they'll never do that. That's my nature on this one. But I would like to see them do a massive tender offer. I think if they did that, it would be very helpful to shareholders that stick with it. You know, as we've said, we would never tender into it.
Sure.
And so if they did a Dutch tender or a massive tender, and I could say as much as $100 billion.
Okay.
And I think this would really change the whole paradigm and make this one of well, I think it's going to be one of the great companies anyway of the next few decades and of the last few. Reminds me of IBM in the old days, you know, where people really got involved with it, and they would keep it in their basement, in their safes, and never sell their IBM. And I think this company is somewhat reminiscent of that, but obviously many, many years later. And we would like to see that. And, you know, I did talk to Tim Cook. I called Tim, and I told him this letter was coming, and I obviously confidentially sent it to him. And I said to him, you know, Tim, that, you know, first of all, I asked him if he still believed, as he did a year ago, it was undervalued, and he said, yes, he does. He thinks it's very undervalued. But then after that, I said, you know, it's really, this should be done. It was a very friendly conversation. It always is with Tim.
Sure. And
obviously, he was non-committal. He has to be. But as an old poker player, I put all my chips into the pot concerning the fact that they will do this buyback. But that's just me. I want to make it clear, with my instincts, believe in it. I can't say in any way that Tim, you know, gave me the nod. But, you know, sometimes you go by instincts and the way somebody is talking without.
Did you, Carl? Did you guys discuss a number? I mean, you threw $100 billion out here.
Actually, I can't really recall if I did. I shouldn't say no. I just can't recall that, Scott. And I'm being very candid with you. I
understand, but you've thrown $100 billion out on this program just now. Let me get to Apple's response.
You know, maybe I'm exaggerating a little bit, but you know that's what I'd like to see. I just think that looking at this company and you know, I don't say this lightly. We've been in many companies. I've been in many companies over the years, and your instincts just tell you sometimes when you see a great one. And you know, I've made money with some of the great ones over the years, but this is in that category, and I can't say it strongly enough. Now, could I be wrong? Sure. I mean, that's what markets are. But luckily, I haven't been wrong all that much. So I haven't been wrong too often when I really, you know, take both hands and buy it, and that's why we have so much stock.
Right. So speaking of the stock that you have, Brett and Dave, and this is the biggest position I believe you guys have ever had. So that certainly speaks to the level of conviction that you have in this company and the case that you've laid out today. I'll ask you first, Brett. Have you guys bought any more stock recently?
Not very recently, no.
So your position is roughly this? How big at this point?
Well,
as a firm, we own approximately 53 million shares. We haven't sold a single share of our Apple investment, despite the over 50% appreciation you've seen so far. And as you've seen in the letter we just laid out to the company, we think the stock today should be trading at twice where it's trading in the market today. and we laid out very rationally as to why we think that is the case to the company, and encourage them to use some of the $164 billion of cash that they have sitting on their balance sheet, earning nothing, and use that money to buy their stock, which we think is trading at half off where it should be trading today. And we don't think those numbers are aggressive. Those are our beliefs as to what they should be doing based on the product set that they have today and the track record of innovation that Apple has had over time.
Carl, let me ask you about the issue of, if you're so convinced that Apple is such a great company, that Tim Cook is doing such a great job, that you have such great belief that he's the right person to do this job, why don't you just let him do his job? And to help me answer that, I want you to listen to Omega's Leon Cooperman, who I know you respect him. He respects you as well. He owns the stock. He, like you, believes it's undervalued. He was on Squawk Box this morning, and he made a comment about sort of how public this has become. Let's listen to that, and let's react on the other side.
I don't know about all this public communication, he's terrific, okay? But I remember he was on with Scott Wapner, and they got into a little tiff, and Scott was asking a question, and Carl says, well, I want to talk about what I want to talk about, not what you want to talk about. I kind of believe water seeks its own level. He should have a private communication with the company. What's the reason for public communication?
Carl, do you want to respond to that? Why does this have to be public through letters and otherwise? Why not just a private conversation between you and Cook?
Yeah, I certainly respect Leon, and so I don't want to argue too much here, but I just disagree in the philosophy of corporate governance. Owners should have things to say, not to micromanage. We've been extremely successful in companies that Leon's owned, actually, and I think Leon has said to me that without us being there in certain cases, it wouldn't have happened. And it's been public, and it is public because boards are human beings, and sometimes they need a little pressure. In other words, I've said that to some extent the system is dysfunctional. And I would tell you that if this was a private company, if this is a company I owned, I would buy the stock. Now, how do you get a board to do something? And I'm not saying this in a derogatory way about Apple's board, because I like Apple's board, because Apple's board kept Tim Cook. And there was some criticism of that. If you remember, we were very strongly behind Tim Cook a year ago. There was talk about naysayers about Tim, and the board did keep him, and so therefore they acted responsibly. So this is not one, like in many companies you heard me really criticize the board, so I'm not doing that. But I think it is extremely important to get to the shareholders, the owners, and say, this should be done. And board, this is what your shareholders feel should be done. And the more shareholders that join in this endeavor, the more chances that it will be done. And I think Leon Kuberman would agree that if this is a great company, shareholders are extremely benefited by having a big buyback. You're sitting with $135 billion, and you as a board member, and I think Tim has said it's very undervalued, why not buy a lot of stock? And if you just go whisper to him as a little, mealy-mouthed person and just go in and say, oh, I don't want you to be mad at me, but please, would you listen to me? It's certainly not going to get the reaction that it's going to get when you write a public letter.
Right.
And so, it's sort of ironic because Leon sort of agrees with a lot of stuff I do, but
I think he
raises. I want to make it clear I respect Leon.
Look, he made that point clear as well, related to you. But I think he's asking or making a point that others have made as to whether this is the correct approach or not. Let me ask you as well.
I will say it's certainly been a successful approach, and I don't think the billions and billions of dollars I made for the maybe millions of shareholders of the companies I've been involved to would tell you that it's a bad approach.
Sure.
So I'll just say
that. Scott, if I could add one point to that, it's that the company last time around also said that they solicited feedback with respect to our request for buybacks, solicited feedback from other shareholders. So obviously, we'd like to make this as widely read among the shareholders of the company as possible in advance of that.
Well,
and we hope a number of shareholders will, bother to write a letter or write to them to say that they can do it. I mean, this is not in any way micromanaging, which I would never do, especially in this company and especially as well as they have done and as much as I respect them. But this is more of a financial question. And to me, I look at things real simply, as I said. The simpler the better. It's simple. It's almost crazy not to use that money to buy something if you really think it's undervalued. And it's not like, our critics before said, well, hey, then they need money to do capital spending. They don't need money to do capital spending. They got plenty of money to do that, and they're doing it. And they've done a great job. I mean, it's nothing taken away from this company. So it should be done.
And they actually have. I mean, you got to realize that their cash, the overall cash position, is still at 133, billion net cash, even after the buybacks that they've been doing.
Right.
So it's just indicative of how much cash flow the company generates, which gets right back to our point of how strong the earnings are. And in a situation, as we predict, where the earnings will continue to grow, that's just going to be exacerbated from a balance sheet point of view where more and more cash will grow. Let
me ask you just a fundamental question. We try to make this a little bit interactive, and we had one of our viewers tweet in a question, which I think is a good one, and I'm sure you'll have a response to it. And they say, why should any company buy back stock when the price is at an all-time high and you've got a falling market? We're having this conversation literally when the Dow Jones Industrial Average, guys, is down 250 points. Markets are more volatile now than they've been in many, many, many months. What's your response to a question like that?
I think it's an interesting question. And, we are looking at this for the long pull. A year ago when I bought this stock, to digress a little bit, there were critics that said, Icahn, he's a smart guy, and he wants to get out, so he's writing this letter. Since I wrote that letter, and after I wrote that tweet that the stock went up, $14 billion or something, I not only didn't I sell, but I bought a lot more stock, right? So I am in this for the long pull. People say I don't go for the long pull. I own things 15, 20 years. Apple, to me, obviously anything could change. The world changes. This could change. That could change. You change your mind on things. So but I'm in this because I think Apple is going to double. I'm not in it day to day, and so it's almost the opposite. Your criticism, well, why do it today? I really don't trade stocks very much, and I've owned stocks 15 years, 20 years, 18 years.
Right.
Look, it took me 4 years on Forest Labs, and we just made $1.5 billion on it. You have down days. We have down days, a lot of them. I mean, we own energy stocks and they're getting killed. I'm not arguing about that, but nobody's smart enough to know when do you buy at the bottom and when don't you. And hey, I'm not telling Apple go spend $100 billion tomorrow and buy the stock. I am saying this is a great opportunity to buy this company. And hey, I'm not going to pick the day you buy it, but this is in this case, you look at the stock that doubled. In a lot of cases, that criticism would be right. The stock doubled, don't buy it. But in this case, the reason it doubled, it was so damn cheap to begin with, number one. And number two, the iPhone 6 is a watershed event. I think the iPhone 6 and the new iPad that's coming or whatever, we hope, has differentiated this company so that you can't catch it. We equated it, analogized it to the stock, to the horse Secretariat.
Right.
Where I remember watching him at the Belmont. I'm not a great fan of horse races, but I love seeing, something great or some great player, And I love seeing that Belmont race where he moved ahead 31 lengths. 31 lengths at the Belmont, which is unheard of. I remember being a young guy and going to the OTB window and taking a lot of money and betting it on Secretariat, right? And I remember it to this day, and I really equate that to Apple. I think Apple is just moving ahead of the pack, and now's the time to catch them, and that's all I'm saying. But I can't tell you, that today is the day to buy it. Probably it isn't,
I want to bring back in Carl and Brett Icahn, David Schechter as well, all three joining us today on the phone, as you know. Carl, you've been concerned about the market. You've expressed it publicly. Again, down 270, up 270. Now today down another 270. What are your thoughts?
Well, as I said, I've been quite concerned for the last year or so. But, we still have a hell of a lot of stocks in our portfolio, so you sort of root for the upside. But I have a lot of hedges on. I've been putting on quite a bit of hedges, shorting the S&P and the CDS on the high yield, my major hedges. And I am concerned about this whole economy. I don't think you can keep it. I've said this for the last year or so. You can't keep an economy up just with the Fed. The Fed alone can't do it. And not to harp on it, I think that one of our problems in the country is that while we have great CEOs and great boards, too many of them are mediocre, and that is one problem. But
do you fear a big correction? Like the correction people have been talking about for some time, Carl, that hasn't come to fruition. Do you think it's coming?
Yeah, no, I think it's definitely coming. It's just a question of when, and that's the point. I mean, is it this moment or not? And you see, what really influenced me a little bit is when you see everybody getting sort of bullish and all the economists are telling you things are good and everything's wonderful. That's when you got to start watching out. But I'm not telling you I can pick at all when it's going to happen, and there's some good stuff coming out, obviously, the economy and whatever, but I can't pick when it's going to happen, but it will happen. And is it today? I don't know.
It feels like, it feels like to many people that maybe we're in the beginning throes of a bigger pullback, the likes of which we haven't seen in a long time.
I have to tell you, it's one area when you start picking exactly when a market's going to move up and down, you might as well pick up when the farmer's wife is going to shoot another 7 in Vegas. I don't think anybody can. There are too many variables to pick. What is the moment in time? But you count on a macro level.
Right.
Look at it and say, hey, something's got to give here.
Hey, Carl,
okay.
I want to ask, I want to get to Netflix in a moment with Brett and Dave, but I want to ask you about eBay and PayPal. You were very public, clearly, in your desire for those two companies to split. They now have made the announcement that they will, even to your surprise that it happened as soon as perhaps it did. Marc Andreessen is on the board. You guys had a little thing going on Twitter and otherwise critical of one another. He took a big shot at you yesterday on this very network. He criticized you personally. He criticized your method of activism. You want to respond right here and now?
Yeah, you mentioned that to me last night, and I went home and I watched what he said. And I'm no great fan of Andreessen, and I tried to listen to him, but he talks in that high, squeaky voice, and only a dog can really hear him, in my opinion, and really get what he's saying. But I sort of picked it up, and when it comes to Andreessen, I sort of inherited a sense of outrage from my father, in the sense of getting incensed at guys like Andreessen who, take this holier-than-thou attitude. But while they're doing this, they're literally, and Andreessen really stands out, and this just abrogates his fiduciary duty, and I just get incensed. I mean, maybe at the risk of sounding corny, I get enraged at that type of thing, and I went after him pretty hard, for literally stealing Skype from eBay. In my opinion, he knew Microsoft was very interested in Skype. He went out, being on the board, and the Skype had a value of of $2.7 billion when he went out and bought a fair amount of it. I think 65%. 18 months later, he sold it to eBay for $8.5 billion. Now, don't you think there's something wrong with that? And don't you think yet he's still on the board and still, taking this sense of a high morality. It's sort of amazing with a guy like that. And there are other guys like that.
Right, but I mean, look, he made a pretty personal attack. I mean, he didn't pull many punches, Carl.
Well, with me, I mean, look. In fact, I'm sort of glad he did it in a way. It's sort of funny because I think he's really mad at me because I have been a force, obviously, and I'm proud of myself for being this. And I say, the risk of being a modest force for getting them to split that stock. He has been a force for not getting them to sell off eBay. And I really believe, being that I'm a cynical person, I believed he's really mad at me for doing this because I really believed he was planning to steal PayPal just like he stole Skype. I mean, that's what he does. That's the kind of guy he is. And guys like that, I just can't abide. I mean, and I can understand him being mad at me because I might have taken a shot to get PayPal. And by the way, that might make me sort of happy because he probably knows that there's a couple of guys waiting out in the weeds, a couple of his buddies that want to buy PayPal at a big premium. So I guess that's good.
Maybe someone wants to buy eBay now. Is that what you're for? You're still in the stock.
Hey, I look, Andreessen's actions, he's so mad at me for doing this kind of thing that he takes these personal attacks. And interestingly, we had this non-disparagement agreement, when we made the deal with eBay. So but that's what he does also. He just ignored the fact he has it, and he broke his covenants. And now that he disparaged me, I guess I can say what I want about him. And we had a 220 request going on whatever happened with Skype, and we may consider putting that back into play now that he's decided to break his covenants. But he does that. He breaks things like that. I mean, he's sort of there are great CEOs and great board members. I would say, again, like Tim Cook is on one side of it in Silicon Valley. In Silicon Valley, they're interesting people, and they're on both sides of that continuum. Again, I'll say Tim Cook's on one side now. Andreessen's on the other. And some of these guys like Andreessen, I mean, it just gets you grand. I mean, Andreessen, it's a sort of known fact. Andreessen, he screwed more people than Casanova, for Christ's sakes. And yet he goes and he takes this attitude that he's on the high moral ground, and it's just as annoying as hell to me that a guy like that is still on this board after what the hell he did at Skype.
Let me switch to Netflix, if I could, and Brett and Dave, that's where you guys come in. Carl has certainly credited you guys on more than one occasion, including at our own Delivering Alpha event, in interviews with me in the past. Are you guys still, Brett, in Netflix?
Yep, we're still definitely in Netflix. It actually is, I was thinking about the point that you made before about the guy who tweeted about the, why buy Apple at, this price since it's like almost all-time high. And, obviously it's interesting because with Netflix, we started buying it at 68. And, all along the way, we've, faced criticism like that from many people saying, that why hold it on? It just doubled, and it doubled again. And, we just continue to have a very strong thesis about the company's growth and about everything that they were doing right and why it was going to be worth what, I don't want to pick a specific target now, but obviously it's all the way up to where it is now in the high 400s, and it's something that we continue to hold, and we think. I mean, I still think it's as we wrote in a letter once, one of the greatest consumer bargains of our time, and they have you have great growth domestically and internationally and great operational leverage at that company because the fixed costs are pretty much static to the extent that they choose to keep them static.
Right. I want to be clear too.
Yeah,
I mean, not only are you still in it, you guys haven't sold a single share. I mean, Carl's made it clear in the past that he sold some of what he had. You guys have not sold a single share. Is that right?
We have the vast majority of our position. It's a 30% position in our portfolio that we manage at Sargon, including the derivative. So it's a huge position for us, and we are.
But to answer your point directly, we did trim it.
That we shared a year ago very much holds true today. And the right way we think to look at Netflix is to look out into the future, because as Brett said, it's a company that has the biggest cost being content, and content is fixed. So whether there's 200 million subscribers or there's 40 million subscribers, the same set of content costs the same amount of money. So as this company gains subscribers, there's massive operational leverage, and that's why the critics of Netflix have been wrong and then saying that the company makes no money, because it's not really relevant. What's relevant is how many subscribers are they adding over time to get to a level that justifies the leverage in the business model.
Okay. Guys, I want to thank you again for joining us. Again, Dave Schechter, Brett Icahn. Brett, by the way, named to the next list here at CNBC. I urge you to check out the entire list on our website. Carl, I'll let you go with my last question, and try and make your answer brief if you could, because I want to get back to covering what's happening on Wall Street today. Last time you said that you would test the waters perhaps in a proxy fight with Apple if you didn't get what you wanted. What happens if Tim Cook says thanks but no thanks? See you later. What are you going to do?
There will never be a proxy fight with Apple and me. Tim Cook has performed admirably. The board has acted responsibly. And if they don't do it, hey, I'm still their buddies. When you make a couple of $1 billion on a guy's stock, and he has performed as well and as greatly as they have with these products, I'm their buddies, and there's never going to be a proxy fight. So I am just doing this, and I think, I hope that, and I've had good talks with Tim, that he respects me and is listening to me, and that's all I can say about it.
All right.
Okay.
Carl, I appreciate you certainly for joining us. Brett and Dave, again, from the Sargon portfolio, annualized gross returns of 36.5% since 2010. We'll talk to you guys soon, I hope. Thanks again.